So the fact that we're out there and you guys are here, I would say, put a round of applause together for yourself. The strength to come out and network. Now, as a punishment for those coming late, because we know they are still coming, I think it's good for you to move forward so that they can sit at the back, right? So I would recommend that you please stand up, move forward. Also, it's great for the pictures as well. Yeah. And so if you can, please move forward, to the front, so that the latecomers can, take the back seat. Great. So as you do that, this is our agenda for today. We are running a little bit late, but we will catch up much later. But the main objective for today is to network. So it's not just to have discussions, and listen to discussions, actually to network and meet people. Now, AfriTech Basecamp. So before I speak about AfriTech Basecamp, it is very tied to this, right? So first of all, I would want us to watch this video. Like that's something that's you have the credentials. Okay, so as we wait for that, it'll be great for us to introduce ourselves, right? So an opportunity for everyone to know you, know what you do. If we can quickly do that, just your name, what you do, and probably your specifics, what you're actually looking for tonight, right? One specific thing quickly in 30 seconds. I'll start. So my name is Bimbi. I'm the CEO of Travel Genie, and I'm specifically looking for a banking as a service provider, right?
Hello, I'm Kwame. I'm currently a founder of AdTech companies that work in the media space, and currently, I would say, also looking for backing in our project at the minute, but also just wanting to network with people from other places in the industry and business success.
Hi, I'm Mukhtar, working in banking. Specifically to network and just listen more about what's going on in the industry.
Hi everyone, my name is Ade. I work in tech as a PM, and I'm just looking to meet founders and to understand the industry a bit more. I'm currently not a founder, so I'm just here to learn and experience.
Hi everyone, my name is Abina. I'm a lawyer. I work in corporate finance. I'm here just for networking and to try to get involved in maybe a social life.
Hi, I'm Faiz, the CEO of Lexus, an AdTech company based in Nigeria. We're expanding in the UK and Europe now. It's the right time to invest in Africa now. And if you are busy looking to exit in the next 3 to 5 years, talk to me.
Hi, I'm Jessie. I am the co-founder of YAI. YAI is a AI content marketing tool that we are in the process of developing. I'm here to meet some potential investors and network with the founders.
So I'm going to pass it next to someone sitting here, so if you can come forward. In fact, someone sitting here, so please let's take the front row if you can, because we don't want the pictures to look terrible, do we? So guys, come on. Thank you very much.
Hello everyone, my name is Abdul. I'm the host of the Jam Diary. It's a podcast it's a podcast that documents stories of people that have relocated and living well abroad. I am looking to network with people and probably have guests on the podcast.
Hello, people. My name is Ty. I'm Ty Kuhn. I'm a digital community builder. I build communities around niche opportunities for founders, creators, and typically I tend to network, get to know people's stories, and to support AfriTech. Get to know people. So thank you.
My name is Dippo. I'm a technical founder of Pair3, a startup platform aimed at connecting people to work out. And my main aim of coming here today is expanding my network, seeing what I can learn from my fellow brothers, and see what opportunity, what value I can provide.
Hello, my name is Iman, and I'm the founder of My Life Milk, which is an alternative milk company, and we're in the startup phase there. And today I've just come for inspiration and networking.
Thank you. So I was going to give somebody sitting here, but there's nobody yet. So we'll carry on for now until we have people sitting here. And when we have people sitting here, they'll carry on the introduction. Is that okay? Great, thank you. So I'm going to play this video.
I'm standing in front of you because I believe deep in my heart that Africans can build a better Africa. And for us to do that, it is going to take each and every one of us to rethink what we know about our continent. The challenges of humankind are not going to go away because we have new data. They will remain energy. They will remain food. They will remain habitation. They will remain environment. And most importantly, it will still be population. So innovation is about doing something new to solve an old problem, or creating a new device or a new solution to problems we didn't even know we had. Those who will be successful with innovation are those who will create solutions that delight, solutions that enhance, but more importantly, solutions that help mankind.
We just spoken about innovation, and we can see that we're not that innovative with our sound. So apologies about that. We actually tested before we came on. Yeah. But I would say that I personally, and this is not a paid advert, I personally read this book, and this book seriously changed my life as a startup founder. And that's what motivated AfriTech being born. And I would advise that everyone, please try read this book. Can you guys read this book here? Yeah. Please try read this book, especially for people in our community, if I would say, because it makes it so simple for us to understand, even before we start reading other books out there. So I recommend that listening. After this, I'm going to put the link on the WhatsApp group anyway. You can send an email if you want a copy. Cool. So what's AfriTech Basecamp about? So it's basically based in London, and it's a networking platform event series aimed at African founders, investors, entrepreneurs, innovators, culture shifters, disruptors, anyone in the technology industry that or support entrepreneurs in these industries are based in the UK. One investor told me sometime last year that one of the biggest things about AfriTech is when we leave where our network is, so the network we probably have our parents have built, our grandfathers, our great-grandfathers have built, when we leave that society, we are basically starting from scratch. And that's one of the hardest things to do. So the importance of communities like this is not just to build your network, but to build it quick and fast. And that's one of the major objectives of AfriTech. Now, I'm going to invite speakers today. Now, as I speak about them, they would please come up here and take the stage. But basically, the major aim is to talk about the current issues that we're facing right now. The whole landscape has dramatically changed, especially when it comes to funding. And it's even harder when you're not privy to that ecosystem. So today's objective is to talk about that. You know, some of you will be in your very early stage, some of you will be in your late stage, and we have a diversity of speakers here who are various stages. So we would, if you have questions, there'll be a QR code where you can scan and drop your questions as well. We can take some questions as well while we carry on. But the idea is to learn, ask questions, and most importantly, afterwards, carry on the conversation. It's not just going to end here. So the first person I'm going to bring on stage is someone that it's extremely difficult to get. So I must tell you, I sent him a message months ago, and he only replied yesterday. Months ago. That actually shows you how busy he is. So the fact that he's here today, my heart was already beating that I wasn't going to show up. But the fact that he's here today is actually a blessing. And I would ask that you should please take the opportunity to speak with him because he has a wealth of knowledge. He looks young. Right? The first time I saw him and I saw his picture, I thought he was 19 or 20. He has a lot of knowledge, right? So please welcome Andy Davies to the stage. Now, second person as well, quite similar as well. And today, I've known her for like 2 years, chatting with her, but difficult to meet her, right? And the fact that she's agreed to come today is just fantastic. She works for one of the biggest businesses that you can dream of here in London. And anytime people say, "Oh, you know Frida, are you sure?" You know, it actually gives me pride that I have a WhatsApp details. So I think take advantage of having here today as well. But I'd like to welcome Frida. And last but not least, he has actually been here before, and is anytime anybody that has a startup in Africa and say they're raising money, I'll say, "Have you spoken to Gerard? He has a lot of money." That's what I shall be saying. I'm sure it's students. So I'd like to invite Gerald. This is the second time he's been here. He was fantastic the first time. He's somebody that has great knowledge, especially when it comes to businesses in Africa. So please put your hands together for Gerald. Great. So yeah. So there's the QR code there. If you have any questions, please just scan, drop your questions as we carry on. Now, give me a moment. Actually, I can start by maybe just give 30 seconds to introduce yourself.
So firstly, apologies for the late response. You know, people don't call anymore. Right, we live in the future. People just message and you get 2,000 messages a day. No one calls me ever, right? So just call. Yeah, that is not stupid. I apologize again. I'll respond in time. Keep good. Hey everyone, I'm Andy. I have the privilege of spending every second of my days with our culture, and that's Black founders and Black investors. Just pushing forward our people and our culture. I invest in the early stage Black founders. Used to be a founder, VC in the US here. Done some angel investing, now set up a new fund to the same capital to invest in Black entrepreneurs before the market knows they exist, and that's in Europe. And part of the fund will cover the continent as well. And besides that, I do some stuff in the community with people Black VCs, and trying my best to be accessible and helpful to anyone who's Black wants to get into startups as well.
Hi, my name is Frida Singoma. I've been an investor since 2000, so I've seen so many cycles from the tech boom to the tech bust to the financial crisis. I'm currently a VCT manager at Octopus Investments, Octopus is the largest VC manager in the UK. We run about 13 billion assets under management. I also sit on the investment committee of a VC fund within Octopus that's focused on technology, mainly later stage technology. I've had a business in Africa. I lived in South Africa for 10 years. I started a beauty business and took it from a piece of paper to one of the largest beauty service brands in South Africa, which is where all my grey hairs come from. But I love Africa. We don't directly invest in African companies, but I still do a lot of work in Africa. I have a company that's focused on the development of the African diaspora art ecosystem. So there are two things that I love. I always say art and Africa. Africa is my playground.
Hello everyone. I don't know about having so much money to be able to, I think my network's gone down a bit. But it's great to be here again. I'm an angel investor and an entrepreneur. I have started companies myself, but I mainly focus in Nigeria, Kenya, South Africa, and Egypt, the big four, as you'd expect. So started investing in 2019. Well, first investment was in 2017. And the founder that's doing extremely well now. Probably my best investment ever. I'm still waiting for more of those. But yes, we founded Deeper in 2020. We founded Dan in 2020, the Diaspora Angel Network. So we are a syndicate of angel investors who invest in Africa. We've evolved into Deeper now, and that's basically just allowing us to do more things like real estate investments, like consumer lending focused funds, and more SME focused lending funds as well. But a big part of what we do and will always do will be VC, i.e. angel investing in Africa. We're purely Africa focused, but always happy to share what we learned from over the years from the continent.
So you will notice there is a wealth of knowledge. The main thing is we're focusing here on people of African descent, whether your businesses are here or in business in Africa, it doesn't matter. We think we share common interests. So it's a lot of knowledge that your questions apply. All right, we can start. So I'll start with you. Yeah. So as an angel investor focusing on founders in the UK, what specific challenges do these founders face in the current funding environment, and how can they effectively overcome them?
So I think some of this is in our culture generally, and we have that startup with hope. It's not a culture in business. It's just see no one calls anymore. See, that's it. Right? Is honesty. Right, I find that, and I'll give an example. VC 7 deals 24/7. There's a black founder, too many phone calls, right? No, like this person's great, you've got to talk to them. I'll talk to them. If they're a black founder, they wouldn't be there to say hands. Right? I'll talk to them about this. They're not quite there yet. So I'll then contact the VC. I'll be honest with the founder and then I'll forward. So what they can do to improve, if there's room for improvement, it's just my opinion, which is opinion. And I'll go back to the VC or the angel and say, hey, I didn't feel great. I didn't already. And they'll go, oh, I know. No, so why do you send them and say they're great? Oh, well, I want to do introduction for them. And I'm like, all you're doing is farming them. With me, they're safe. But elsewhere, it's a first impression and talk to it as well. It's so hard sometimes to get that second to create a second impression. It's just so hard in a short period of time, especially in bad times, financial times like this, where you need money today. And maybe you can come back in 6 months' time and another climate. In this climate, 6 months' time, they exist. So I think in our culture, with black investors and black founders, you as founders will want to as well. Be honest with each other. You, right? You only pass each other if you see someone, you don't let them great, you don't let them know. Right? You should at least offer your opinion on how they can be better. And they'll do the same to you. And even if you talk to VC, I don't mind getting messages like, hey, there's a founder we want to talk to you. I don't think they're ready yet. But I'd love you to have a conversation with them also, about 100%. So I think the one thing that's missing, especially just honesty, I think that will tell us so far, to be honest. And what was the second half of the question?
And how can they effectively overcome that?
Just be honest, I think that's what.
Thank you. Frida, I'll go to you next. How has the capacity of later stage funding, post 2023, affected the strategy of VC firms like yours? And what advice would you give to startups navigating that phase?
I think it's the opposite. So I run a venture capital trust. So we take companies from private to IPO stage. And then I sit on the investment committee of the tech fund, that's later stage investment. And the truth is that there aren't that many things to invest in. So we're struggling. The ideas we know are there, but we're making it much harder to find them. So venture capital trust, for example, I know there's talk, there's if you look at the papers every day, there's less and less money coming to UK capital markets, and that's definitely an issue. But one thing we find it easy to do is raise money. Because at the very early stage, whether you're going from private to IPO, there's still opportunities for investors to get involved. So we do raise money. So there's money at that end. There's less money when you're trying to scale. So even with the Apollo fund where I sit on the investment committee, I was speaking to the principals and partners yesterday, and they said they're having to work 3 times as hard to find deals. So there are opportunities around. There's opportunities to invest. Now, how they decide to invest is a different story. We're seeing some things, but the quality is very low. And I think it's important for us to understand, even though there's money, there's not stupid money out there.
Quality is quite important. I think when I read this book, that's when you opened my eyes to all the things I wasn't thinking about. Because I found that we just focus on the ideas, but there's the organization, there's human resources, and all the other things as well. So
Because you see at the far end of the business journey, right? From when I see at that aviation, and you're out there like it's going public, you're exiting, quote unquote. You talk to how, because founders nowadays, they're being told you have to adapt, you have to be profitable, you have to care much more about unit economic. But actually, economically, your business is still the same. You still need the outcomes to be the same for those businesses. You still just like maybe some numbers that are high level as to what you still need these businesses to do to be eligible or just be a fit for your business.
So in the public fund, IPO fund, we invest in pre-revenue companies as well, never mind profitability. It just depends, one, on, I guess, the market. Is there an opportunity for that company within its market? Do we believe that the founders can deliver on that? And then there are other things like governance issues, the culture within the organization, what the opportunities are for strategic partnerships, etc., etc. So they don't have to necessarily be at a profit level at all. I mean, I'm all for capital markets because that's a market I've worked in. I know a lot of founders think they have to be 100 million, revenue before they can think about being a public company. That's simply not true. And you don't have to give up 90% of your company to be a public company. We have investments in companies where the founder owns 60%, for example. I think it just depends on the quality of your business, the quality of your market, the opportunities that are available to you. It's always good to have a strong management team. It's belief in people, because you're still at the small stage where we are investing in people. No?
So how are these relationships with you and the team?
So the process is not as straightforward as it should be. So the people that they build a relationship with are usually lawyers, and lawyers make the introductions to them, and people on the public market who might be nomads and brokers. So lawyers and accountants would do that. And then the lawyers and accountants and brokers mainly come to us and say, I've got a great idea. So what we're open to doing, and I've told, Black businesses, because we do not see any Black businesses. I haven't invested in any at all.
I think the ways I talk to go to you people and like you please be honest businesses that seriously want to be a company to
Yeah.
they want to go to you, and we don't see that.
At all. I mean, absolutely nothing. But we tell them we're open to seeing early look. So even if they come to us and say, listen, we're thinking of floating in 2 years, we'll have a look. And we've actually invested in businesses pre-ITO where the founders have the intention to float. So we're open to doing that. And I think more and more Black businesses need to explore that opportunity because it will change the landscape completely, especially for you, because you then see this trail of exit that's possible. But right now, it seems we stop at Series B and Series C, and then there's nothing left after that.
I think the follow-up question I want to ask, I think Andy can answer from the UK perspective and Gerard from AfriTech's perspective. Why is it that you don't see, why do you think you don't see Black businesses? What's going on at us early stage? Why is it that she doesn't see it's so red when she's
yeah, I think it's my view is that we have to be honest with where we are. I think the reality is we are still in the early stages as a community, and that's why the work Andy's, I know I'm a big fan, by the way, so it's good to see you here. What you're doing is amazing, and you're some of the pioneers in that space. And if you, so just aside, my very first deal I was going to do was a founder in Cambridge. So we're trying to go with the Cambridge Angels, invest in a company. Now, this founder, the whole process just smelled of a system that's been built over years. And I went through that process and I thought to myself at the end, there is no chance for any of my people in this system as it is today. Because you either have to have known someone in Cambridge that did a PhD, that's gone to Oxford, that's gone to a good school. It's all about networking, it's all about who you know. And there's a very good reason for that. It's de-risking, right? So these guys are de-risking their investments and they will invest in what they are used to. But there is the flip side to that is you shouldn't just invest, you shouldn't just think of de-risking, you should look for opportunities. And opportunities are not limited to people from a certain background. The opportunity is quite broad. And over time, I believe, I'm optimistic, it will take time, I'm very honest with myself, that it's not one day you wake up and these things happen. So events like this will be useful, and over time, we'll begin to see more, but we should be a bit patient. But more importantly, I think that what Andy said is that we have to be very honest with ourselves and learn. You know, we are on a journey and we have to learn a lot. So you have to just keep learning, keep improving. The quality will come out, and eventually you get more and more people in the pipeline. That's my view.
If I may, and thank you so much for the kind words. I think we all haven't got to chase one type of business as well, and I think that we also have to be a bit more collaborative as well, right? So many, I think if you're first or second generation, especially first going second generation, would have been incredible overlaps in exposure, skill, knowledge base, problems that we've seen, and solutions that we can imagine, right? And when sometimes people pitch to me and I'm like, oh, there's 10,000 of these things, I'm like, let me introduce you to one or two other people doing the same thing at your stage. So I think a founder, and people always ask, oh, you had such incredible co-founders. And I was like, well, I think I'm also decent, but that's fine. Right? And how do you find them? And I'm like, actually, coincidentally, just purely coincidentally, they were both running their own startup at my stage. One was selling a product, similar product to the same customer. The other one was just building something very similar technically. Right? And both times just acquired both their companies for almost zero, gave them shares in our business, and we just progressed. Right? And I think we need to do more of that. I think if I think about it's about the PayPal story, or it's about the Alibaba story of 16 co-founders. But we need more of that in our ecosystem, in our culture, and our community. And we need to also build things as businesses. I saw one of my companies started off as just a logistics company, just a small shipping products out, right? One guy by himself. And now there's a massive warehouse, but then he developed some software along the way to himself. Now all the competing companies want the same software, so now we're selling the software and it's got a different potential now. But he started off doing this, he started off just making money. That's really important. We're in the world of business. I think sometimes we confuse, oh, we should do a startup with this app or with this cool thing or something I'm super passionate about. Passion's fine, right? And it's often enough to drive you, it's fantastic. But you can be passionate about solving problems as well, right? And you want to find, if you want to do business, you want to solve a problem fundamentally and make sure that you make money. So to answer the question, I feel we'll get there 100%, right? And it's just a matter of time. We have to make sure that in our fund, we're incredibly concentrated in what we do. And so yeah, I say all the time, 4 to 6 deals a year, maybe 1 to 2, the right ones, because it will come and serve the whole culture way better tomorrow, right? And that's it, we just discipline ourselves today.
Yeah, thank you for that. And I think one thing I can add, especially what Gerald said, I think about 2 years ago, or a year ago, I was speaking to a Caucasian investor who reached out to me, heard about my startup and said, "Maybe your idea is great, but I don't know you." And that kind of opened my eyes to say, he made an example. He said, imagine if someone asked me for £1 million now. The idea is great, but would I just hand it over to this person? The person from Adam, I don't know how to follow up. If the person decides to change their behavior tomorrow, and that just kind of opened my eyes on the importance of not just building my network, but starting with my network and expanding my network. So, yeah. Gerald, this question is for you. So based on your experience, and this is on African market trends, what are the current trends in the African startup ecosystem that entrepreneurs should be aware of when seeking angel investment?
It's a tough one, for Africa, to be honest, and that's just the truth. Angel investing on its own is very risky. Doing a startup is risky. Doing it in an environment like, Nigeria, for example, just even makes it worse, right? So, it's risk upon risk upon risk upon risk. But the flip side is opportunity upon opportunity upon opportunity. I think the current trend I'm seeing on the continent, which is changing, in my opinion, for good, is that 2-3 years ago, someone would come up to me with a copycat deck and valuing it for $5 million. And I'm like, really? You've just got the deck. It's similar to what someone's done in the US or in the UK, and you think, oh yeah, replicate this in Nigeria. We've got 200 million people, and all of a sudden we're just going to go, ooh. So I'm what, 5 million, which was very, very difficult. And TD here today was one of the people that was telling me then, and said, this thing is going to change. It's going to pop eventually. And I think it has. I think people are a bit more realistic. I think what founders, particularly I'm seeing in Africa now, are doing is a separation from the men from the boys. Because, like you rightfully say, we're not, or founders are not in this game to build a great product, right? You're a business at the end of the day. I tell, the developers that I mentor that every line of code has to have a business case. So if you find yourself writing code and there's no business case, there's no value, you could end up spending tons of money, wasting time. So what I'm seeing now is that people are becoming a bit more conscious of what they spend their time doing. I'm seeing founders becoming more capital efficient because they now know they can't just go put up a nice deck and say, oh, I've got 100 people following me on Twitter, so my product's great. They need to come back with more substance because the VCs, are doing proper due diligence now, right? They don't just give out the money like they used to. Again, for me, it's all part of that learning curve. I think it's good that it's happened. It's a bit more scarce now, the money. But for the ones that are really innovative, those would always succeed. And also the last point I'll make, and I was saying to someone earlier on, and please don't take this the wrong way, but not everyone's an entrepreneur. Not everyone's a founder. So you really need to ask yourself a question if you're really a founder and you're really an entrepreneur. And what we're beginning to see now, the real entrepreneurs coming up with ideas, pivoting, making changes to the business models, and they are still getting the money. So those would be my response.
So if I can add to that, so entrepreneurship is so hard. It's just so hard, and it just gets harder every single week. Some weird reason, it just gets harder and harder and harder. And it's like, and Joel's right. If you're gonna, I've said to entrepreneurs all the time, I get them call it pitch, and I'm like, and if I'm this way, I'm like, wait, why are you working on Saturday? And there was something I'm like, okay, just my opinion. I think you should spend this weekend brainstorming. I'm like, if you're gonna kill yourself if you're really committed, you're gonna kill yourself for years to make this work. Oh my gosh, you might as well put your effort towards something bigger than this, right? You might as well put it in the right direction. If you still want to do the startup thing, if you said yes, I'm a founder, yes, I'm an entrepreneur, please just make sure you're doing something that's worth that time and commitment from yourself. Because with a high chance of something not succeeding as well. Right? And not everyone's meant to be an entrepreneur, as well as like everyone's meant to be an investor either, right? It's that we've seen many investors come, go, many are appearing now, many won't survive, many won't last. They're coming for the vibe or whatever it is. I don't know what they're coming for, to be honest. And it's cool, it's a very nice job, the thing to do, it's fun. Every hour is different, every half an hour is different, but it's also hard to succeed, right? And it's not so hard as entrepreneurship because Matt does something as an investor, you don't really feel better after some point if you like to survive long enough and just get a job and then someone will pay you and then you'll be fine, to be honest. But just know for me, as an entrepreneur, it's super hard. So if you're definitely sure you're committed, make sure you're just working on the right thing too, please.
Thank you. So this is for Frida, and it's about evaluation criteria. So when assessing later stage startups for investment, what are the most critical factors or metrics that you consider?
I think I mentioned some of them before, but I think just from, there's so many things that we consider. So first of all, I have to say that I think the management team is critical because people like to say, oh, that's a people business, and people businesses go bust if they're not run by good people. Every business is a people business. It just takes the entrepreneur, the founder, the CEO to really mess up and there's no business there. So it's assessing who's actually running the business, what the core values are of the business. So a lot of people just look at the mission statement and objectives and it's like, oh yeah, no, I believe in that. What are actually the values that they're instilling in this business? Even if they're small now, the values will travel with them as they scale up. So that's very important. The other thing which is important as well is what is their market? You know, what is the product level? Does it work? That's one. Sometimes we look at a lot of technology companies and we fail to ask ourselves, does this technology actually work? That's critical. And is there a market for it? If the market's for it, how big is that market? Is that company able to actually operate in that market? How will they reach their market? Who are their customers? Because we see a lot of companies where they're like, oh, no, I've got Mexico as my biggest customer. I'm like, okay, but you're only making 20 grand a year from them. Who signed this deal in Mexico? And you find it's someone who literally has a budget of 20 grand and it's not going to go any deeper than that. So looking at who actually is signing the contracts with them and what the opportunities are is critical. On a metric level, I think you mentioned it. We see lots of companies and they come in and say, oh, my valuation is 50 million and their pre-revenue is like, are you sure about that? So valuation is important. We see a few founders who are precious about valuation. And then you can kind of work out from there whether they're serious about growing their business or not. If you are passionate about your business, you won't care about dilution. So the valuation is important, and how the founder sees the valuation is critical as well. How the culture, how the other members of the team are incentivized. We've had situations where founders have fallen under a bus and the business goes bust. Because there was no one else. They were training nobody else. Everything was in the founder's head. You need to look at who else is in the business. Another sort of, I mean, more than I do about other metrics that you use, particularly in technology, and all that sort of stuff. But the other thing we look at is debt. I think debt is critical. We see a lot of businesses come and say, yeah, you know, we're worth this much, and you find out actually the valuation they're talking about is the size of the debt that's in the business, and it just doesn't work.
Thank you. I think this question, Andy Gerald, you can also answer this, but someone is asking, how much traction do a pre-seed startup need when raising before launching an MVP? And I think this question is getting more interesting because I know, for instance, some fintech startups are required to raise traction before they go live. So how do you do that before going live? So the question again is, how much traction do a pre-seed startup need when raising before launching an MVP?
I think this is the famous answer, it depends. It depends on a number of factors, but what I'd say, the question is a bit interesting because traction before MVP. So I wouldn't look at a startup that doesn't have a working MVP. You know, I usually would like to start seeing some traction. What I would look for is not just someone using your product, but I'm looking for the value that you're creating for the person. There's always been this debate between subscribers, paid subscribers, and users, right? So you could have 100 users, but only 10 people actually pay. And people brag about the 100 and forget that it's only 10 people that's actually giving you revenue. So if I was going to invest in a company, what I will be interrogating very, very critically is the customer one paying for this or happy to pay for this? And I flip it round. I want to, you hear a lot about product market fit, but I tend to flip it around about market product fit. I want to hear the feedback from the market. Now, if you can demonstrate to me that you've actually engaged with the market, you've built a product based on the feedback from the market, then that gives me a bit more confidence. And it doesn't, I invested in a company late last year, had no customers whatsoever, but what he could tell me was the feedback he got from the market. And this was hard evidence to say, right, this is what people have said about my product. This is how they would use my product. I've improved the product by doing X, Y, Z. And yes, I got invested. Now, that's my opinion, right? But early days, but I'm super excited. I look at other things actually, to be honest, not just traction. Traction is not the most important thing to me. The most important thing to me is the founder. At the data I come in. Do you have the experience, domain experience? Are you the right person for this? So those things are more important to me than traction, but traction is important. How that help?
That's who didn't ask the question. What? No, what's the start? Great marketplace. Great marketplace. Great marketplace. So what you do is that. So essentially, on top of the empires, and see if it connects with business clients in need of the services to enhance the events. So that's photography, DJs, so much more. For example, at this event, if these guys need to join us at the media age photographer, they were going to your platform to find out. Yes, so we do with niche creatives as well. So event hires in terms of like bouncy castles, shot lane. So the question is, what traction do you need pre-product to raise money? Right. So we've had numerous of conversations with investors, VCs, and the idea is right. We haven't got a product, but they want to see a bit more traction. So I'm just asking. So perfect. Right. So friends of mine joke all the time and say you should get a t-shirt saying I would invest in a spreadsheet. So I'd invest in an Instagram page, a spreadsheet, text messages, emails. I just want to see validation that someone needs it, right? And but I also believe that 95% of startups you can validate for free. Right. Within the marketplace. So you need a photographer. I would go on Instagram page and go, hey, got any events out there, we've got the talent. If you need a photographer, just DM us and we'll connect you with a photographer. If you just showed me that you're doing this every single month, or every single week, for 10 to 20 visits or something, right? And consistently, and they're referring other customers to you as well, and you're like, hey, we need money to then build our first version of this product. Then I'll talk to you about how much money you need for that product, whatever it is. But then that's the type of traction that you need, right? And that, the way that shows that that's entrepreneurship. That shows that actually you've just got to make it happen, regardless, right? So on traction, that's traction I want. The traction is in the team, it's in the people, it's in you, it's in like how you people need this. We talk about in tech, we say vitamins versus painkillers. We're all gonna take vitamins every day, but not everyone does. But if you're on pain, you take a painkiller, right? We want to build that painkiller. So if it's a true pain, again, it comes back to what you're working with, why, right? Then you just make it happen somehow. Somehow, some way you make it happen.
Thank you. This question is for Gerald.
Yeah, I mean, I'm just thinking about his business because when I started mine, I remember a lot of people said, you know, I didn't seek funding, by the way, I funded it myself, but a lot of people said it won't work, you know, and it was beauty services. It was literally eyebrows, doing eyebrows and lashes in South Africa where they didn't know anything about brow works. And I took their criticism very well, actually. I was like, I will show you it will work. So I pitched up everywhere. I've even pitched up at corporates and say, half of your staff are ladies. We're going to pitch up in the lobby on Friday and do their eyebrows. Because I knew those, then probably half of them would turn into customers, for example. I barely used social media at that time. Instagram wasn't a thing. But then a friend told me about how to use Facebook. We ended up having 50,000 followers, which in that day was like unheard of. You just do what you can, you spread the news, you pitch up at places, even if they think, gosh, we don't need this, there'll be people there that need your product. So do that.
So that's a perfect example, right? And so if you invest in black founders and very privileged to have the access we have, right? If there's a black human being in Europe, imagine starting a business, 99% of them will make their way to me or to us, right? And but gosh, on that 1% though, I can't sleep. But I hate it so much. Right? And when we see that they're out there and they're building these businesses or they're raising money, we should get in contact like, hey, do you want to say hi? Like, and we have a conversation. Like, first question is, why did you call us? And a lot of the time it's, oh, we didn't think we were ready for you. And I'm like, this is such a nonsense. That's my fault. I mean, I haven't made it clear enough that you should come here when you first start this business, right? It's my fault. And I think it's the same mentality, a little bit of, we all know Mark Zuckerberg started Facebook, but there's a story that's kind of untold. I remember very quickly, he was invited to dinner in 2005 or something after he started it. And the head of Google, Alibaba, eBay, all these people there, whatever. And he's just a guest. And Larry Page, the CEO of Google, then is speaking. And he just interrupted and said, hey, Larry. And I was like, hey, who use that? I'm Mark, Facebook. And he's like, oh. And he's like, hey, why do you use Facebook? And then people would write Mark, like, Mark, shut up. Ask Larry Page a question, that's CEO of Google. And he's going on and on, like, why would you use Facebook? And still, he gets a score off the table, right? And he said, and he was like, I should use it. He was like, why? Like, everyone should use Facebook. He just had this thing, like the same thing. He just pulled up somewhere and he was just like, if you are my customer, there is no reason why you shouldn't use our product, right? And that's the mentality. Like, if I was doing your business, these guys talking to them, like, how do you find this guy? But why didn't you use us? Wait, oh, we didn't know where you were. Why didn't you know? Where did you look? Okay, we need to be where you're looking. We need to make sure we're replacing all those services we're getting that service. You need to have that audacity, I think, as well.
Thank you very much for that.
Matter of fact, make sure these guys use you for. Sorry.
Yeah, so I think this is following up from one of the questions you asked about you investing in founder. So someone is saying, from your experience, what are the key traits you noticed from entrepreneurship?
Great question. So what I tend to, there are a number of things I look for in a founder. I think the first thing is integrity. You know, it's very difficult. Integrity. Please. I was just gonna say, it's very difficult to assess that, by the way. So it's a very difficult thing. You want that. You try and look for it, but people will put the best foot, best face, best whatever forward, right? And usually in this day and age, you probably spend maximum 3-4 hours with a founder one-on-one before you eventually invest. So that's not enough time to actually determine, you know, if that person has integrity or not. So if I can't get that, which is usually the case not, I have some stories to tell. later on. If I can't get that, then what I'm looking for is that you actually, two key things. Is there really an understanding of the domain that you're operating in? I've never invested in an AfriTech, right? And that's not because AfriTech isn't great. I just don't understand that domain. So I can't confidently put my money in something that's AfriTech. It's the same way for the founders, right? If you haven't done finance, whatever, in your life, and then you go, well, you want to build a fintech platform where loads of transactions will be going on, you just get confused. Now, what I would expect you to have is someone who's good in finance, who knows finance, either as a co-founder, right, or someone on your staff. So it's domain experience, very, very important. And then for me, because I invest mostly in Africa, I also want local experience. What works in the UK doesn't work in Lagos. It's just the fact, right? What works in Lagos will not necessarily work in Nairobi. Right, so you always look for, okay, do you really understand the local content as it's popularly known? You know, do you really understand what's happening locally? And then the most important thing for me is this a business, right? Going beyond the product, and I think we touched on that earlier on. Is this actually a business? Is there a business behind this thing? Will people pay for this thing, and why would they pay for it? So those are some of the things that I have to look out for before I start investing in.
Thank you very much. This question is for Frida and Andy as well. So I'm trying to understand the question, but it says, where do small tax appear on 5 million pounds on 5 million pounds under are our potential ideas startups go for advice and funding? Considering VCs have an exit benchmark and small town ideas and not meet most benchmarks to invest.
So I think angel investors, right? And maybe you need external resource, but there's a lot of grants and stuff as well. I even do something like on Instagram, I feel like stuff, some Mondays, just like on fund opportunities that are meant to be like founders. And I think angels, so that's the perfect question, because then it then separates startup from business, right? And gosh, I was telling one of our companies this morning, we got in at a super great valuation, it was very helpful. And they were like, oh, they think that it'll get to maybe 20 to 30 million revenue in 3 years. They're doing really well now. And they thought we'd be disappointed to hear that. No, no. We've got another 1 million valuation. That's great. That's fantastic. Yeah, do that. Let's find 50 of those actually. And so you have to find the right type of investor for you. And actually on that business, a VC, another black VC messaged me yesterday and was like, hey, this company, I got them involved when I invested. And then they were like, hey, they don't want to raise from VCs. What do you think? And I said, fantastic. They just want to raise from they raise from their customers. Their customers are begging to give them money, right? Imagine that. And they raise it from strategic partners. And I think they know their name. They just understand their business so well. They understand it's not a venture. They understand the what they believe to be the max capacity or where they can take it. And thus they're pursuing customers. They're speaking to customers for money. They're speaking to angel investors and other entrepreneurs as well. They're not wasting their time in incapacity with any VC at all, right? So they just understand your levels and understand this. And that could be a grant, that could be other forms of funding, revenue-based finance, or whatever it is, if terms are correct and stuff. But yes, not everything requires a VC, just find your lane right in.
I have to agree with Andy. VC funding is not for everybody, and it shouldn't be the first thing that you look for. And I think particularly if you're a founder with a small business, I would look for strategic partnerships, frankly, if it was me. Are there other businesses that are much bigger in your sector, or people you actually are partnering with that could invest? So trade partnerships are important. I think there's this hype about VC investment because they believe that, once you've got VC investment, you're on your way to being a unicorn, which I find extremely strange, but here we all find ourselves. The other thing, just to give advice to other founders here in terms of advice, is always seek a mentor. I have to say that was one of the biggest mistakes I made when I was an entrepreneur, was actually not to seek a mentor. And it doesn't have to be, I was saying to Iman earlier, it doesn't have to be someone who's doing exactly the same thing as you're doing, but a much bigger business. Just seek a mentor who maybe is in an adjacent sector, or someone who you admire in the way that they actually grew their business, and just say, can I have 15 minutes of your time? And they'll be able to give you advice. If the route is for VC funding at some stage, maybe look for a business that has VC funding, now maybe on Series D or whatever it is, and say, will you, could you be my mentor, and see what that process is, rather than always looking for that much larger business. We do see people, I mean, to Andy's point, the problem is where we find ourselves, and Gerard's point here, where we are, we have to be honest about where we are as Black investors. There are not that many of us. And I think we don't get to invest in Black businesses because there aren't that many Black investors, so people can knock on their door and say, hey, we're here. That is not changing very much. I hate to give people bad news.
I'll change that.
He's on it. But even at the public company level, there are a few of us. There's a group called Black Portfolio Managers, which I'm proud of. We're not that many, but we're there. But I think what we need to do is be more open to talking to people like Andy, who are at the early stage, and then sort of building that ecosystem that takes companies from that early stage to the late stage.
Great. We've gone past time. Sorry. But like we said, it doesn't end here. Networking afterwards and carrying on with the conversation. But up next, I'm following up from what Frida talked about in terms of getting a mentor. I know I have said this. I'm still getting this. Sorry. All right. Oga said I should rewind. I'll change my schedule. All right. So first of all, can we thank the panelists and give them a round of applause? Thank you, guys. So like I was saying, Frida mentioned about getting mentors, and I know I say this story a lot. So I remember sometime last year, I was speaking to the godfather that would be coming up next to be my mentor, and I was telling him about my idea, and I was like, oh, quite interesting, but unfortunately, his accelerator just passed. So I was like, it will never be too late for me, Jesus' name. I have to join one way or the other. But I would say even his book has mentored me a lot, and that's why I always recommend it to every single person. But it'll be good to hear from him in person. He's arguably the biggest investor in Africa, right? And we have made sure that he's not just known in Africa, he has to be known here by force, right? If you need his address in London, come speak to me. So up next, our keynote speaker today is Mr. Tomi Davies.
First and foremost, I'd like to thank the panelists. Andy, where's the young lady? Thank you, ma'am. Gerard, thanks. There are some golden nuggets in there, which I hope you guys were all listening, because that was really, really good. Now, because my memory is getting shot to pieces, I had to write what I'm about to say. So you'll have to excuse me, but I think you guys are too important for me to ad-lib. So I had to think through what I wanted to say to you, okay, before tonight. So here we go. It's navigating, the theme is navigating the current fundraising landscape. What I wanted to do was actually see if I could provide some insights, okay, and strategies. So here we go. The journey of a tech founder, especially within the African context, is akin to navigating a vast ocean. The waters are sometimes calm, often unpredictable, but always full of potential. Today, I want to share with you my own insights on how we can sail these waters, leveraging the winds of innovation, partnership, and determination to reach our desired shores. African founders often face hurdles that their counterparts in more established markets might not, including, and you've heard it tonight, limited access to capital, regulatory complexities, and a lack of infrastructure. Yet, despite these obstacles, African startups are finding inventive ways to thrive, marked by unprecedented growth and dynamism, leveraging their unique strengths and the growing interest from global investors. So let's take a closer look at some of these unique funding challenges that I talked about. First is, you talk about TD, African Angel. Guess what? When we started, there were 100. There are still less than 3,000 angels on the African continent of 1.2 billion people. So the pool of local investors and venture capital firms willing to invest in early stage startups is still relatively small in many African countries compared to more developed markets. This can make it challenging for startups to secure seed funding and early stage investments. Just think if you're from Botswana or Namibia, what you're up against. Second is the one that was talked about a lot here, perception of risk. International investors often perceive investing in African startups as high risk due to concerns about political instability, regulatory uncertainties, and of course, especially given what's happened in my home country recently, currency fluctuations. These perceptions can deter potential funding, even for startups with strong business models and growth potential. Then there's the regulatory and bureaucratic, bureaucratic hurdles. Navigating the legal and the regulatory frameworks in African countries can be complex and time-consuming. Startups struggle with issues ranging from company registration, simple company registration. I had a company that was being registered, and after 4.5 months, I called the vice president and give him an earful. And then within 48 hours, it was registered. You shouldn't have to do that. Comply with local tax laws? I wish you well. Fortunately, we're getting the National Startup Act passed, and that is starting to mitigate some of those. But it's still tough. And of course, I just mentioned Namibia and Botswana because they're unique cases I'm dealing with right now, which is this last point, access to international markets. For many startups in Africa, scaling up often means expanding beyond their home markets. However, accessing international markets requires overcoming logistical challenges, adapting to different customer frameworks and preferences, and of course, competing with well-established players. So that's just a thumbnail sketch for some of the challenges, African startups are facing. Now, let's delve into the heart of the ecosystem and how our startups are overcoming these funding challenges. First of all, in 2023, the top sectors by investment funding were fintech, cleantech, e-commerce, health tech, logistics and mobility, agri-tech, education, insurtech, gaming, media, and entertainment. Each sector tells its own story of resilience, innovation, and the relentless pursuit of impact by the amazing founders, investors, and entrepreneurs support ecosystems around them. but they do have some similarities in their funding solutions. So what exactly are they doing to overcome the funding challenges you've heard so eloquently put? That's what I wanted to share. First, they're building strong local and global networks. Startups like Inside Tech and Tropogo, they form strategic partnerships with institutions like Oxford University and Pharma Africa. These alliances not only validate their business models, but also provide them with credibility and exposure to international networks. Second thing they're doing is leveraging technology and innovation to attract attention. Startups are using technology not just as part of their product offerings, but also to demonstrate their capability for innovation and scalability. What am I talking about? Well, Health Tracker's partnership with Babylon showcases how leveraging technology in telemedicine can attract international partnerships and subsequently funding. They're also showcasing scalability and market understanding, demonstrating a deep understanding of their market and their scalability of their solutions. Critical example, everybody here ever heard of Zoho? Well, Zoho's partnership with the UK government. Think about that, look where it's taken them. So again, using non-traditional funding sources is something else they're doing. Okay, they're increasingly turning to alternative sources, including crowdfunding. Where's Gerald? Diaspora networks. Okay, and development finance institutions. Africa LPG's partnership with the CDC Group is a prime example. Okay, my article last year on customer-funded startups gives additional insight into this particular approach. Don't worry, I'll be through some. Next thing they're doing, they're focusing on social impact. Many African startups are addressing critical societal challenges, making them attractive to impact investors. MSON's collaboration with Solar Century and Solar Africa's partnership with Practical Action highlight how solving social issues can open doors to funding from investors interested in social return from their investments. Finally, engaging in accelerator programs and competitions. It's not like by happenstance the continent's exploded with accelerators, because what we have is a vacuum of education when it comes to entrepreneurship. And that's the gap the accelerators are filling. So when you hear about startup bootcamp being in Africa, or Techstars, you know, or Seed Stars, that's what's happening. Okay. But it's also about mentorship, exposure, and networking opportunities. These international platforms serve as a launchpad, helping startups to refine their business models, gain visibility, and attract funding. So as an angel network, yeah, I am a network amongst other things, but as an investor, okay, my role extends beyond funding to mentorship, sharing insights, and helping startups navigate the intricate dance of growth and scalability. It's about believing in the vision of the founders and empowering them to execute that vision with precision and grace. I'm glad there's at least one of them in this room today. I'm not going to embarrass him, but when I met him on a stage in Turkey, I think it was, a while back, like, wow, okay, you're doing that? We need to talk. Fast forward, how many years later? I think they passed the $1 million revenue threshold a couple of years ago, and they're going gangbusters. They are raising. If you guys are interested in EdTech, we can have that conversation. As of today, February 22nd, 2024, there are 7 confirmed African unicorns. These are startups worth over $1 billion. They span various sectors and countries, demonstrating the diverse and growing tech landscape. Most of them come from Nigeria. No biggies. Who are they? InterSwitch, founded in 2002, this fintech giant provides digital payment and commerce solutions across Africa.
Flutterwave. Another major fintech player, Flutterwave facilitates cross-border payments and other financial services for business. Jumia, again, Nigeria. Operating as an e-commerce marketplace, Jumia connects buyers and sellers across Africa. Number 4, we got Wave out of Senegal. This mobile money platform is quickly dominating the Senegalese market and expanding regionally. Then we have Opay, another fintech champion. Opay offers mobile payments, loans, and other financial services in Nigeria. Then we've got Andela, which is Nigeria and the US. And its focus is on connecting African tech talent with global companies, making it relevant to the African tech scene. Right? Oh, yeah, sorry. Latest kid on the block. Anybody here from Egypt? MNT Halen. They're buy now, pay later services and other financial solutions in Egypt. Now, why am I mentioning this? Because you already know these. Well, these ventures underscore the transformative power of innovation and collaboration and remind us that with the right strategy, support, and mindset, possibilities are limitless. So in conclusion, while the funding landscape in Africa presents founders with unique challenges, including navigating complex regulatory environments, building scalable business models, and overcoming international investors' perception of risk and regulatory uncertainty, the continent's startups seeking to make their mark on the global stage are leveraging their ingenuity and strategic partnerships to overcome these obstacles. By focusing on innovation, scalability, and social impact, they are attracting attention from a diverse range of investors and paving the way for a new era of growth and opportunity in the African startup ecosystem. So, as we look towards the future, let's commit to forging stronger connections, sharing our collective wisdom, and supporting one another in our quest for growth and impact. Together, we can navigate the currents of the fundraising landscape, turning the challenges of today into the successes of tomorrow. Thank you for being part of this journey. Together, let's continue to innovate, inspire, and hopefully impact the world. Thank you very much for listening.
Thank you very much, sir. And you know, I'm sure you noticed it was talking a lot about Africa, but for those that have businesses here, you will find out you have very similar challenges and also apply. Now, we are rounding up today. Actually, I think maybe if anyone has questions actually for Tomi Davies, and it doesn't, even if you don't have business in Africa, please go on to ask your question. We'll take a couple of questions before. Yeah.
I actually live in Bushy, Hertfordshire.
Osmo, to give some examples of good deals and bad deals, more recent good deals and bad deals, and also something about integrity. Yeah, that's Jeffrey mentioned.
Sorry?
Recent examples of good deals that have worked out well, and also bad ones.
Good deals or bad deals recently? Ooh, okay. Well, last year, because we haven't done any deals this year, last year, because of what's happening in Nigeria and what's happening across the continent, we went into mental health services for corporates. Most people don't think that that's an area worth looking at. But if you're into healthcare, all right, you start to see crazy numbers out there. Like, did you know, let me give you one example. The suicide rates in Nigeria tripled within a 4-year period. And of those, what was it, 60% of them were corporate suicides. So people who were fed up with working in the corporate world. So that's sort of the background to the health tech So that's a particular health tech company that we invested in, so I'm quite excited about that. That deal, we went into a prop tech company that what they were doing or what they were trying to do was to get workers to sort of save. Because if you see in Nigeria, when you go into a new apartment or a new block, you pay 2 years rent in advance, upfront. Okay, so you can imagine you've got to save towards that, and that's where they were coming from. Was to get people to save, and then they would sort of invest that money, get the return. So by the time it was time for you to pay your rent, there was more than enough there. After about 4 years, they went broke. So last year they shut down. So that's one good, one bad. I trust that helps.
Thank you. My question is for someone like me who not very entrepreneurial, but I'm very interested in public service. So my thought has been, it appears that entrepreneurship, especially social entrepreneurship, is one of the most efficient ways of actually solving public problems. So my question is, how can you advise someone who's more interested in politics and development to be more entrepreneurial as the means of bringing social change?
There's a term called social entrepreneurship. And the whole idea, okay, I might get an argument here. We call it the double bottom line. So it's not just how much you've made, it's what impact have you had. That's how you're measured by these funds. So there's 17 SDGs. Okay, I'm quite particular about SDG 5, for example. It's a question of are you an SDG 2, 17, what are those SDGs that particular fund? Okay, you might find climate, maybe one, infrastructure, maybe another, et cetera, et cetera, et cetera. So it's being consistent with that and what your passion is for. I trust that helps.
Tini, could you share some wisdom from your experience? I know you know a lot of founders. If you could think of maybe people are in the early stage of their journey, they're very ambitious, but they have a very big focus on raising money in an early stage. Could you share some wisdom from your experience? Maybe some advice to
Yeah, well, as you heard from the investors, early stage, nobody invests in ideas. We're investing in the people. All right. So that's sort of the first thing about early stage, because we all know, no matter how good it is, it can be better. Okay. And there's a 6 out of 10 chance you're going to have to pivot into something more lucrative at some point in time. The question is, do you have the capacity to recognize that? And when that time comes, do you have the capability to make those changes and adjust, okay, accordingly? What I tend to look for are people who are passionate about value creation and understand it enough to be able to articulate how that value will be created. I'm not talking about how money is going to be made, okay? Because to me, money is a measure of value creation. So it's about who is this thing valuable to, and are there enough people across the world who can perceive that value enough to say, hey, you know what? Here's my money. I trust that helps.
Good evening, and thank you very much for the insightful topic, and thanks everybody else that has put that. I was thinking about something else, and with the currency devalued, especially in Nigeria, are you seeing any trend towards entrepreneurs focusing on producing for the global market, where maybe through resources of export, we are able to take advantage of that, not see that as a disadvantage, but more than an advantage? Are you seeing any trend towards that, and what do you see happening there?
Okay, I should have put you on the spot on that, or should I leave you alone? I'll leave you alone. But the answer is yes. Okay, all of a sudden, Nigerian startups that have the export capability are discovering that they can do that. So what is happening is very simple. All right. Like in our case, we said we've broken our investments down into two lots. If you are a Nigerian startup earning Naira with less than 10% exposure to FX, we Naira denominate our investment in you, and we monitor you here on out on a Naira for Naira basis. That way, we don't have the FX. We're only dealing with it within your cost of risk. If on the other hand, you are, and we do have people like Trove and a few others in the portfolio, you're actually earning FX from the diaspora. My favorite of all of them, for those, well, by the way, my portfolio is available TDCNG, you can go look it up. True Flutter have had 17 marriages so far. And out of the 17 marriages, 16 have been diaspora. So they're making money hand over fist, getting you guys to love each other. Those are the kind of plays. Are you with me from an export standpoint? We're looking for is, can you have knowledge export? I have another startup called TerraWave. They're competing with Upwork and Fiverr. Okay, so they have local Nigerians and living standards. So it is happening. It's not big yet, but it's starting to dawn on people that can sit in Lagos and produce value for people in New York and London. How cool is that?
Yeah, it's what Israel has done really well.
Sorry?
It's what countries like Israel have done really well, like selling to a global market as opposed to focusing on local market.
Sorry,
I thought it's something that countries like Israel have done really well, selling to a global market when they have a very small.
Yeah, unfortunately, the challenge is this. You look at places like Israel, or what have you, we've got a structured infrastructure capability. All right. And when I say infrastructure, I'm not just talking of bridges and roads. I'm talking of people and institutions. Okay, that's what I mean by infrastructure, the whole caboodle. All right.
So how would you empower the founders that you work with to look globally and not just locally? To look globally and not just locally, certain things.
You knew you shouldn't have called. You knew you shouldn't have called. Ladies and gentlemen, I'd like to introduce Mr. Faiz Bashir. Faiz is the founder and CEO of FlexiSab. FlexiSab is an edutech company that has over 1 million kids now. Yeah, over 1 million children under management with their software. And predominantly, for those of you who know Nigeria, northern Nigeria. That's a feat. And last year, ARR $2.3 million. Okay. Now, Faiz is here because FlexiSab has started looking at expansion into Europe. And we've received very, very positive affirmations about that. So rather than just tell you, I thought I'd show you. I trust that helps.
Yeah, my question is kind of nicely rolling on to what you just shared. Sometimes the actual sourcing of talent, I believe in Africa, can be difficult. And that's a good example you've given about how you perhaps share and upskill people. But there are certain industries that are probably notoriously underdeveloped in terms of skill and knowledge. How do you navigate that first hurdle before you build an actual business? So for example, let's just say mechanics. Would you, for example, implement the knowledge or borrow it from, like areas like mechanics and maybe energy?
I wish you hadn't given that example, but auto mechanic, I've lost more money than anywhere I've seen. 2 startups have taken my money and one disappeared, the other one went bust. Trying to solve that particular problem. Okay, why? Because we've got too many fake spare parts. Okay, that's the first issue. Second is cars are moving towards electronics, so people are being trained. Okay, more importantly, we don't have the systems in place to be able to do this. And that's what we were trying to do, was bring them in and everything else. But yeah, it is a tough one, especially when you have localized institutions, okay, that are fossilized, excuse my language, but you know what I mean. Okay, they live in the dark ages. Everything is still pen and paper. You say I've got an app, and I say, what's that? I don't even have a smartphone, and you're telling me to use an app. So you've got sectors like that have those challenges, unfortunately, as well. Perhaps that helps.
I think if something around that topic. Okay, so we are rounding off the session today, but just before we go, I'd like us to as well give Entrepreneurs Collective a round of applause. Yeah, so I'll pass the mic to Pat to say a few words and to close us off as well. And then please just carry on. It doesn't stop here. It actually starts from here. So carry on networking and yeah, thank you.
No, it's not me that you thank. It's the man who's been keeping you refreshed all evening. Please big round of applause for Dan Valley Africa. Thank you very much. I thought we've got 60 seconds to talk about Valley Africa and what we're trying to do. So Valley Africa really exists to support African companies, so companies who are founded in Africa, manufacture in Africa, to help them reach Western markets. So I set out really focused on, I looked at areas where I felt like I could compete globally, and food and beverage I think is an excellent place. You know, if I could be the next Nando's, and Nando's originated in South Africa, and actually grown to like a $1 billion company kind of globally. But manufacturing in Africa, African culture, and taking that to the world. Actually, I think there is a second wave of that going to happen. We work with brands such as African Originals, which is a Kenyan cider brand, Pedro's Ogogoro, which is a Nigerian spirit brand, and also started to work with Real Fruit, which is a dry fruit company, and Aduna, which is also a tea company. So I think there's massive potential for Africa globally. We're here to represent. And yeah, if you haven't had a drink yet, grab a drink from us. And also, if you're looking to purchase anything, www.bagafrica.co.uk, you've got something for £4 to one of the best gins you've ever tried at £130. So thank you very much. We literally grabbed the drink, so unfortunately we are super tight on time. This venue has been very kind to us. They stepped in at the last minute when our original venue had a plumbing problem. So we only have till 8:30. Please do go see Dan in the kitchen, but we do unfortunately have to vacate this room imminently. And then after 8:30, we head to the George, just out of the front doors, turn right and across the road, and we hope to see you all there. Thank you very much. Good luck.